Hello everyone, this is your boy Cosby Finance, Kylie Leke here, and today we're going to be talking about how we could actually make use of psychological levels. Alright, so if you're new to this channel, I'd like you to hit the subscribe button and also be a part of the community. Alright, and if you want to know, in this community all we do is make lots of money. Alright, I give you free strategies and I give you free indicators that you can use to maximize your profit. So if you want to get free stuffs, or you don't know how to start and you don't want to burn your money, this is the right place for you. All you need to do is to hit the subscribe button just like this and click the bell button so you get notifications whenever we upload awesome videos like this, and also be a part of the Telegram group. And you could also do yourself a lot of favor by taking the free course that I've created for you. All right, and inside that free course you gain access to the free indicators that I also use. All right, so and here's the link, you can see, and you could also chat me up on WhatsApp, and I'm going to get back to you right away. All right, so without wasting much time, let's go into our chart and let's see what we have for today. All right, now we're going to be talking about psychological levels. All right, psychological levels are levels, as the name implies, that the market follows psychologically, in terms that these are levels whereby individuals like traders like you and I tend to either place our buys or our sell or our exit. All right, so these are levels where we see lots of demand or supply take place. Yeah, a lot of traders are actually accumulating at these same levels to either demand or supply. All right, now without wasting more time, how do you spot psychological levels? Simple. Now, and before I go into that, I also need you to understand that psychological levels can be used in place for support and resistance. Yeah, you could actually if you have problems spotting support and resistance levels, then this is the right video for you, where you can easily spot um, psychological levels and use them as support and resistance. All right, so now going right into my chart, now you understand right here, you can see that I drew these lines. You can see these white lines. These are the psychological levels. Now, psychological levels are usually drawn with an interval of 50 pips. All right, the range between them is 50 pips. All right, you can see here that I'm using 245. You can see that I use 250, then the next is 255, the next is 260, right? Like just like that. So on your chart you can go ahead and mark these levels. Now for each market it varies because of the value of the market. All right, so even in the forex market is the same, it varies. All you need to do is to spot 50 pips interval between them, and I would advise that you actually do that on the 4-hour chart. Yes, so you go to your 4-hour chart and you mark up these lines. So in this I've marked up some here already. All right, just so that the video can be a short one. And if I'm to mark up the next one after this 245, the next one will be 240. All right, so if I right click on this line, I click properties and I go to parameters. All right, I can just edit this to be 240 and I click OK. All right, that's it. You can see now, if you check it, you realize that you can see the market in this place went up, came back and retested this level, pushed back up, came back and retested this level, then pushed up again, came back, retested this particular level, this 250 level, and got rejected and pushed back again. You can see, so that's how psychological levels can be helpful. All right, now these are known as the major psychological levels. Now for the minor psychological levels, you can actually put them in between which will now be 25 pips. All right, so you could put one here, right click properties, then the value here will now be 2. Okay, this is 255, so this will now be, let's say, 257.5. all right, then click OK. That's it. So you can see it's now in between. So all you need to do is just to calculate your major psychological levels of 50 pips. Then from there you can decide to choose you can now decide to mark your minor psychological levels, which are 25 pips. All right, so you can actually even give them a different color. Properties, come on, you can give it a different color. Maybe you just want it to, can give it maybe something like yellow, maybe, so that you want to differentiate it from the others. All right, so that's how you can actually mark up these levels. Okay, let me just go back to smaller time frame, like let's say 15 minutes. You will see a lot of reaction around these levels. All right, now just look at this. You can see the market pushed up, retested this level, then pushed up again, then was rallying around and came back, retested this level. You can see, then you can see the market went up, retested this level again, and pushed up. You can see it broke this one, retested it here. Let me increase it so that you can enjoy the ride with me. All right, guys. Okay, you can see it pushed up, it tested this level right here. If I mark this up here, if I mark it here, and I go to my 5 minutes, you will really enjoy it the most. All right, you can see this push higher and retested this level. You can see pushed higher, broke this one, retested this level again. You can see that there were accumulations on these levels. You can see, then it pushed higher again. All right, came back, retest, then push higher again. It was trying to break the hair, it didn't break, then dropped, then rally around, got a support on a minor psychological level. I didn't draw it, but if I draw it now, you see that it will be on a minor psychological level. You know, just bounced on it again, then pushed up again, then came, then was bouncing on this major one. You can see bounce, then you can see pushed up, then came back down again here, bounced on this one, then came to hit here again, which is this minor. You can see, then dropped again, it broke this major one, then came to retest it again. This would have been a good entry for a sell, then drop. All right, so you can use it for entries and support and resistance. So whenever you can use it to trade your break and retest strategy. All right, so you can see market broke this one, so instead of you entering when it broke it, no, just wait for the retest. At the retest, you can see that when it retested this level, you can see that it corresponded with my RSI, then it dropped, it was overbought. All right, that's it. Now look at this same scenario also. You pushed higher, you broke it, then came back to retest. All right, then you can see RSI level, then push higher. That's it. Broke it again, came to retest it, RSI levels, you can see, then pushed higher. So that's that. Very simple. You can see went up, came back, retest this level again, RSI level right here, went higher. It looks like magic, but trust me, it's just so easy for you guys. So I need you to go back to your chart to backtest this. This is an awesome strategy where you can trade the break and retest, using psychological levels. All right, so in another video I'm going to really expand this for you so that you can actually see how you can actually make use of it with your RSI extensively. So I'll see you guys in the next video. Take care, and do not forget to subscribe to this channel. All right, hit the subscribe button and click the bell button so that you can get notifications whenever we upload awesome videos like this. I'll see you guys in the next video. Take care and bye for now.